said I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne. So you wanna be my enemy? You should've known I'd never kiss the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane? It's your mistake. Kingdoms rise and fall. I've come to take it all. I'll take it. I've come to take it. Kingdoms rise and fall. I've come to take it all. I'll take it all. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same. Cause that's what it takes. I take shots to the top, I'll get it. I got one life, I'ma do all to win it. I do never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
All right, y'all. Happy Friday, 7:25. Let me know if you cannot hear me. Looks like the mic is working okay. Welcome. We made it through another week, ladies and gentlemen. And tonight's just a casual hangout. I've sent an invite out to several guests. I see at least one in the back room. And we're going to talk about what happened in the market this week. Maybe some of the banger plays, for sure. Some of the retail drama and meme stocks that we all hold near and dear to our hearts. Maybe a little bit of movie chat. I did go see Fantastic Four with the wife last night. And I know everybody is really hoping for a good Q3. We're just about to wrap up the first month of Q3. So without any further ado, though, let's get into the fun stuff. Go grab a cold one, or if you're like me, grab a cup of water. Yeah, it's one of those Friday nights. Still keeping, try not to do any alcohol until I'm at my target weight, which is now we're in month 7. It's killing me, guys. It's killing me. But I am learning to like water. Let's bring on our first guest here. Allow me to find his intro. Who is it? Who do y'all think it is? Correct. The number 2 hooded YouTuber behind Tony DeNaro.
I'm getting my infamy score up. I'm gonna pass you.
We really do both care about all of you guys. I know Corex, he smacks you around, as you saw in his intro. He smacks you around a little harder than I do. I just post filings and opinions. He will come after you, but at the end of the day, everything is about reading filings, not looking at things emotionally. Figuring out how to sort through what is PR fluff and what is reality, and then using all of that to what, Corex?
To find good stocks.
To make good trades. Yep. Exactly. Everything we talk about is not to talk you guys out of trades, not to make you angry. It is to try and provide some balance in the information you're giving to help you make better decisions. I'm just, Corex, I'm tired of people crying because they lost all their money in a speculative play. Look, I play all of these speculative plays, Corex, just about all of them. But I have 2 key rules, and those have to do with how we manage risk. Number 1, size your position according to the risk. Don't fucking mortgage your house, go get a loan from the bank, et cetera, because some dipshit on social media told you this thing was about to moon. It's okay if you want to trade it. I'm not ever going to talk you out of speculative trades. I do them all the time, but I only put in it truly what I'm willing to lose. If I lose all of my money the next day, well,
It's like when you go to the
on
casino.
to the next one. Yeah.
Do you go to the casino and unload your entire credit card to play, slots? No, that's dumb.
You don't want to lose it all on the first blackjack table when you got a 7-day vacation in Vegas, correct? You got to pace yourself, ladies and gentlemen. And the best way to do that is have the proper information, understand the risk and the reward. We all get the reward. I mean, who doesn't want a moonshot? But manage the size of your position. That is the first key to managing risk. And what was the second one? Managing this. Oh, getting a good entry. Mm-hmm. I get a lot of shit out there on social media. Correct. They want to say, Tony always tells you he gets the lowest entry. No. I mean, I post all my trades in Discord. They can tell you I don't always get the lowest entry. That is a lie, an ad hominem attack from people on social media because they don't want you trying to get a low entry. The key is not to get the lowest entry. It's to get a reasonably intelligent low entry by properly understanding the play. I don't always catch the bottom. No one does. Sometimes I get lucky, but that is another way to manage risk. Do you ever try and get low entries in a trade, Corex, or you just like buying every day at any price?
No, I don't. Well, I mean, it really depends. I don't always shoot for lowest entry. I'd like to get, catch the bottom or but I tend to focus more on picking good companies where you have a security and knowing that the company is a good company. So your entry point matters less because the company is going to do well. And that means the stock price is going to accrue value anyway.
There are a variety of different trades that I do. I don't bucketize myself as one type of trader, although I grew up because I had a corporate job. I grew up mostly just doing, value type trades and mostly mutual funds back then because I was working 80 hours a week and I didn't have time to micromanage individual stocks, but I'd play options for fun as time permitted, especially around earnings. If you guys were around and trading prior to the dot-com bubble, what a time to make money. You could literally buy call options on any high-tech company and make a fortune in 2 days after earnings. But then one day that all stopped and we had to get more smart. But I would say, my preference would be to find value plays, to find profitable blue chip companies that are maybe beaten down in the moment for some company or economic specific reason. Find a good target entry and then hold them for a year or two. Those aren't your banger. You're not going to make 200-300% on those, clearly. But what the idea is we make market beating returns while minimizing our risk because these are solid, profitable companies undergoing some temporary pain. That might be the bulk of what I look at. But then we got momentum trades. I do very little DD on a momentum trade because I'm in and out. I'm in and out so fast it doesn't matter. No DD matters. Is the chart going up? Does it look like it's going to keep going up based on TA for the next 5 minutes, the next 1 hour? You don't need to do DD on that. I like momentum trades. I like value plays. I like short squeeze stocks, but good Lord, man. We're dealing with companies that have extreme risk. They're heavily shorted for a reason. What would some of those reasons be, Corex?
Insolvent companies, bad financials, no income, no revenue. They're like ninja companies, like no income, no job, no revenue.
No revenue. I see that a lot. GTII was one. MMTLP was one. Mullen's almost a no revenue company.
Yeah.
Explain to the folks what you mean by insolvent.
Insolvent means that there's different ways to classify it. The most simplest way is it's a company that has more liabilities than it has assets. though usually the more technical term that is used when determining an insolvent company is they have more liabilities than assets and negative cash flow.
I like to use the more retail friendly phrase of upside down balance sheet.
Yeah.
But yeah, I mean, upside down balance sheet means it's insolvent. They have more debt and liabilities than they do assets. And that is important to understand. All of the reasons Corex just went through. Why are companies being targeted by shorts? I'm not saying I like shorts. I'm not defending shorts. I fucking hate shorts. And I know Corex use shorts sometimes, occasionally.
Usually they're more momentum trades, because when you're short selling and you've got some sort of, you not only have to have a bad company, but you had to have a bad company with a narrative that you can exploit, because you need to be in and out.
And probably you're probably looking for ones that have been run up way above fair value, right?
Mm-hmm.
Not every trade is a good short, even if the company sucks. If it's been beaten down, then it's not a good short. I don't like shorts. I don't short stocks, but I do try to understand how they think. And that was a big, learning for me from 2021 through time, to kind of peel back from the narrative on social media, which I was right in there with all of y'all. Shorts are scared, all the. I started realizing it is important to understand why are they so, emboldened to short these stocks. And these are important things for you to understand. That doesn't mean don't trade them. But if a company has no revenue, that's going to be a short target. If a company has revenue but massive losses, like a GNS, it's going to be a short target. Another no revenue, Quantum. Insolvent company like AMC might be heavily shorted until things change. And, that's kind of the long term. If you're a long-term bettor in these short squeeze stocks, you want to see something fundamentally change from the company. More revenue, get profitable, eventually fix the balance sheet. But if those things aren't happening, Corex, if the revenue's not getting fixed, what is the number one thing that ends up turning our apple cart over on these short squeeze plays? From a retail trader perspective, what fucks us the most?
As far as like the company getting involved in these companies,
no, what ends up turning the trade really against us? And I'm not talking about shorts.
Well, I mean, you stay in it too long. If it's supposed to be some momentum trade that's based on short squeeze, you get the run up, and then you should take profit, because eventually the company is going to return to fair value based on its financial statements and come back down, or other people are going to take profits. They'll get left hanging.
I was thinking more about the D word.
Oh, dilution. That too. A lot of these companies with negative cash flows, the only way to make the cash flow positive is to extract it when the share price value has gone beyond fair value.
And that's not a knock on any company. GNS is going to dilute, Quantum's going to dilute, AMC is going to dilute. I have no problem with them doing that. They have to do it. It's that or don't survive until you're cash flow positive and net income positive. But
I think my problem usually with the dilution is if the company is being a bit more open and honest about their
we're going to get to that in just a second.
I have a little bit more.
I want to, before we start really spanking some CEOs, I want to just say, I understand why dilution is necessary. I spent a lot of time trying to explain to people why some companies need to do dilution. It's either that or Chapter 11. And so, hey, it's up to you to decide if you want to hang around for a dilution event or not. I typically don't. If I am fearful that a dilution is imminent, that's not a trade I will come in until after the dilution event is completed. But these are always divulged clearly by companies, communicated. They're never a surprise that dilution is coming. Corex, could you think between you and me, we could come up with 3 key ways that companies tell us that a dilution event is imminent in the next 1 to 6 months?
Yeah.
What would be a couple on your list?
They start making filings about it. Usually you'll get like, so the most obvious one is when you get the prospectus statement, because before they can even file to dilute, they have to let you know what the financial statements are. So if you see a financial statement come out that's outside of the normal quarterly statements, then that's usually they're getting ready to let you know this is what it is, because we're getting ready to unload some shares on you.
Yeah, I look for a couple things. I look for in any new company that someone says, "Hey, Tony, check out this ticker." There's a couple things that I'll go look at. Let's see if I can turn this screen on. Hey, Sparky, I sent you an invite if you want to come on audio. Check your email. I'll go to like SEC Edgar, and I'll just look over here on the left, form type. I'll be looking for a S1 or a S3 or a F3 for a foreign company, which is basically a shelf offering.
Yeah.
And Genius Group, for example, did a shelf and then they canceled it and then they refiled it. It's really confusing. It's really confusing to people, but they did.
Some might say it's intentionally confusing.
Some might say that. I'm doing my best. I'm doing my best not to type that out on Twitter, but here just amongst us friends, yeah, some of this massive PR dumping is to confuse people because you can't keep up. But they did this shelf offering for $1.2 billion.
That's insane.
July 16th. Sorry.
I mean, this is a company with a market cap of what?
80 million, I think.
Okay. It's not as bad as I thought it was, but still, that's like
no, 80 million to 1.2 billion. I mean, that is,
okay, sorry, million. I don't know why I was thinking 80 billion. Yeah, that's like an insane amount. That's like what, two times their market cap?
I posted.
No, 80. I'm thinking 800. So that's not even 2 times. That's like, wow.
I posted this chart on Twitter, and someone was asking Kevin Malone to please correct me. This can't be true. I'm sorry. Anthony was his name. Anthony and Kevin. There is no correcting facts. Dilution Tracker is not a source of fake news. They take filings.
Why, it's a great resource.
Yeah, it's one I highly recommend you guys get used to using. Dilutiontracker.com. You can use the free version or the pay version. And when a filing comes out like this, they update the company listing and they update the potential dilution. So right now we're at 87.8 million shares with a potential dilution of 885 million more shares. So basically about 1,000% dilution. And they want us to get excited today that Roger Hamilton took 6 million shares out of Class A.
And created a share class that has a super majority vote that
gave him
allows him
10x.
to pass the dilution and other things he wants.
It 10x'd his voting power. So this is it's a fucking shell game where they put out things and only talk about the most positive aspect. Oh, we took 6 million out of the float. Did you tell them that you 10x'd your voting power by converting from Class A to Class C, and Class C has 10x the votes? Did you explain what that means? That now you can control any vote that happens in this company going forward, Roger?
It's the classic Mullen trade, having some...
What they say, and I saw Quantum do this too, oh, this helps us in case of a hostile takeover. There's other ways. I mean,
sure, that's technically true.
Generally, you got blank check preferred stock you could use as a get out of jail free card in case of a hostile takeover. Although I won't say for sure that companies from Canada and Singapore have that luxury. I guess it depends on where they're incorporated. But these are some devious moves with maybe some consequences that people might not understand. when CEOs give themselves, one or two people own the entire vote of any proxy statement that comes up. You are not in control of these companies. That is the takeaway.
Yeah.
And
I find it hilarious that the same people who cry, not trying to defend Adam Aaron, but who complained about the whole Antara thing and then are shilling for companies like this who do the exact same thing, and the dilution is worse.
But they do it even worse, I think, because they try and make it sound like they're trying to address naked shorts. At least Adam Aaron, didn't weave this story of, oh, we're going to sue the naked shorts and hire Share Intel and hire West Christian, and we'll do a dividend on the blockchain. All this nonsense stuff that these guys are trying. Someone posted a list from Roger Hamilton 2 years ago of like the top 10 things companies should do to kill naked shorts. And I looked at the list. He's done 9 of them in the last 2 years, and not one of them worked. He tried 9 of his things.
The naked short thing is a giant myth, a fugazi.
Well, and the problem is, Roger, nice guy. I'd love to come visit one of your resorts out there in Singapore one of these days. But the fact is, until your company is net income positive and cash flow positive, the shorts are probably not going to go away, despite whatever tricks you try.
Right.
You get these little bubbles in the stock chart, which is cool, because you can sell dilution into it and extend your life, and that is fine with me, guys. That is fine with me. But I want you to understand what they're doing, understand a company's motivations, so you can time your trades around it, and then not be surprised, and then not get diluted 1,000%. That's all.
Let me take a look at something here.
What's up, Carlos? I only see one that you should stick to AMC and stay away from his baby Jimmy. Who are we talking about, Carlos?
Is Moran's watching us right now?
I feel
waiting to make another 40-minute screed about our live stream.
I feel like Carlos. One of his comments got taken away there. Maybe he mentioned a name that's banned on my channel by the YouTube filter. I'm sorry. I'm sorry to the people with they get their little feelings hurt if we talk about a stock that you're trading in, that I'm also long in, by the way, at a lower cost basis than most of you guys. I mean, if you got in below $20 back in 2021, or you've been able to get your cost basis below that, you have a better cost basis than me, and congratulations. But Corex, have you heard all of the nonsense coming from the GameStop guys that I hate the company, I hate Ryan? No, I'm trying to educate people how to understand fair value and then get the best possible entry by utilizing common sense, finance, math, and patience. We don't need to buy every day. We don't need to buy at any price. We can utilize patience like we do. I talk about this on every ticker. So get your little feels and go get your blankie and go cry in the corner, because that shit ain't going to work on me. I'm going to talk to people like they are rational adults, and you can have your little cult circus over there and y'all do whatever you want. Doesn't hurt my feelings. I don't care how you trade, but you need to wake up and realize that there's a lot of grown-up traders out here that look at things rationally and are patient enough to wait for good entries. I'm long GameStop. I want to see it shoot up. I want an announcement from Ryan Cohen about the use of the cash. I want to see Bitcoin skyrocket and help GameStop. All the things you guys want, I want it too. But you can't stand that I just sit back, be patient, buy it cheap, and then sell in every run up. You say you've never been wrong in 4 years, yet you're in the red, and I've made profit year after year in GameStop. Tell me who's doing it right and who's doing it wrong.
He's got a classic problem with FUD, facts you dislike. like what is the problem with the whole you did a bunch of financial evaluations of it to kind of give an idea why some of these people are
because they cry correct. So you explain to me, Michael Pachter, how you can come up with the $13 fair value. Okay, since you're not willing to go learn, allow me, to explain it to your audience. I'll use stuff we learned in college. Yes, I studied this stuff in college, guys. And by the way, I checked with my son, who's in business school right now. I said, did you learn this stuff? Discounted cash flows, how to value companies? Oh yeah, we learned that in sophomore year. Like, this is everybody, including Michael Pachter, that understands finance or accounting, knows how to do discounted cash flow valuations of companies to derive a fair value. And just because that number doesn't yield a result that you like doesn't mean that it's incorrect. We can fudge the assumptions, we can change them to generate different outputs and see, how could we arrive at a fair value you would like. But the demonstration I'm doing is based off of current data. And in the next video that I probably do on GameStop after this quarter is over, I'll look at some what ifs for this quarter that's ending. What if this quarter is demonstrably better than previous ones? What would the new fair value calculation would be? And I know that's only what people want to hear. Tony, I only want to hear the best case scenario in the future. Okay, I want to give that to you. But you got to stop complaining right now. You don't understand what's going on at the price. You don't understand because you're not willing to take 10 minutes and watch a video where someone explains to you fair value valuation.
Which is really sad, because the whole point of DD is due diligence is you're supposed to look at the good and the bad. If you cut the bad out, you're just deluding yourself with fantasies. Like, that's not good investment. It's going to get you burned. And it has gotten a lot of people burned by not looking at the negatives.
Yep. I see one more person here. Oh, Sparky. Sparky, how you doing?
Long time no see. How you doing, sir? He's muted.
We can't hear you, Sparky. Check your mic. We'll see if we can get a bond check in on Sparky once he gets his mic going. But yeah, that's what I got to say about GameStop. I love GameStop. I've had changing views on their value over time. Look, the company has been going through a lot of changes. At no point did I say I hate GameStop. I said that a year or two ago, the fair value was lower because it was. It's not my first day last week to do a fair value calculation on GameStop.
My biggest problem with GameStop is like, it is so close to being something that I would want to invest in. It's so frustrating. And it's just
it's come a long way. And every quarter that goes by that the company improves, I'm able to increase my positive expectations for GameStop.
You got me out,
Sparky? Yeah, we can hear you now.
Hear you now.
It's always a little. Let me turn my volume down. It's always a little bit of a challenge getting through the wall here for all of our encrypted stuff. So
the tech wall.
Good to see you, Corax and Skinny Tony.
Yep.
Anybody's wondering where Tony's extra calories went. I've done the zone and I've had luck with it. But boy, I wish I had your discipline, Tony. I'd be a lot skinnier.
It's not easy, Sparky, when your wife does not shop for a carnivore. Like, she shops for a carboholic because that's what she is.
I have no excuse. I do all the shopping and the cooking, and I work out of my home office 3 days a week. So if there was anybody that could just sit here and eat burgers and chicken and fish all week, it'd be me. And I still managed to find the pie aisle over at.
I try and go to the grocery store just twice a month on the 1st and 15th or 20th, and I buy just enough to load up my freezer for 2 weeks with meat. Chicken, pork, fish, beef, whatever. And then when I run out, or when I'm about to run out, I'll run back and do my next round of shopping. But I can't let the wife do it because
Yep.
No.
Yeah, no, that's just it's all about shopping. If you only got good stuff to eat, then you're in pretty good shape generally. So
Sparky, talk to us about bonds. I know you might have some thoughts to share with us. We're on GameStop. We're talking about GameStop. we're
think
talking
the
about fair value versus the speculative value. You
the
know,
only thing I think I want to remind people about any company, whether it's AMC or GMA, when they have a convert, and C&K is actually in this
Cinemark.
Cinemark, and we're kind of waiting. I know you and I, Tony, are waiting because that comes due in about 3 weeks to see
August 15th.
to
Yes,
see
sir.
Yeah, I got
what
an
the
earnings
pace
report
is
even
of
in
it
between.
actually unwinding. And the more I've talked to a few people just in the last week or so that are kind of on that side, and it's what's interesting is I think there's a chance because that's already what 25-28% short or something on CNK.
I'm pulling it up right now.
There's a chance when convert guys, and this would happen down the road with GME in theory if it was in the money, there's a chance there's not going to be a big rush to buy shares because the convert guys have sold shares, even if they're not completely neutral. They're short plenty, and they actually, when they get shares in from turning in the bonds, will just use those to to satisfy the shorts, and they never have to buy a share. My guess is there'll be some adjusting at the end. They may have to buy a little or sell a little more or something, depending on where the price ends up and how many shares they are and where they're sitting. But
I'm not expecting to see massive price action because
I think it's for that reason. I think
right. They're going to use the converts to cover their short.
Right, and I think that'll be a good study for purely because this is 100% in the money. I mean, the bonds are trading at 200. That
they're trading 2x the conversion price on Cinemark.
They should have been adjusting those hedges and shares literally, not even just every day, a couple times a day. They should be fine tuning it, whether they're selling options or whatever they're doing. They should have this down to where there's almost no activity that has to happen right coming into the last week. I mean, we'll see. And I guess the only thing I'd say about GME, kind of the same thing, that I got to stay off of Twitter, man. I don't know. I just get myself in trouble because I don't go after anybody, but when I see somebody say something purely ridiculous, I can't help myself, and
you're exactly like me. Then I can't stand stupid.
I gotta just stop that a little bit, But the thing people have to remember with GME is, and converts in general, is they're a fantastic capital raising and finance tools for companies. That's why AMC did one. I know you and I, Tony, we kind of called that they might do that before they did because it was one of the few tools they had at the time, and that
when we called
AMC, when AMC issued a convert. I think I was on there with you and I'm not sure who the call was we were all on with, but it was.
I think it was you, me, and May. We were.
That's why I'm sorry. I knew it was. But yeah, we just said this would be, if they could do this, it would be good financing, and of course then what's interesting there is I remember when they did that and started the whole movie code thing and moved everything around. I went, I don't know if this is gonna. There's a lot of fighting over this, which has ended up happening, and they're in the process of unwinding that now because they got sued and probably would have lost. That's a whole nother deal.
I don't want to talk about AMC just yet. Let's wrap up talking about GameStop.
So GME and their converts. The reason I'm saying this is it's kind of the same thing, whether it's either one. You have to remember, as good a financing as this is, and even in GME where they were able to price at zero, it does curve down future price action. Doesn't mean it can't go up, but GameStop has two converts that have different strikes. I think one's 28, one's 32 or something like that. The higher the stock goes, as it gets through 28, it gets through 32. And I'm like you, I'm not currently an owner, but I'd love to see it do well and get that. But it'll slow that curve of how much it can go up because those shares will start counting more to the float, even if they don't get in the float for 5 years and 6 or 7 years, whatever it is. The people calculating value of the company and the value of the share are going to start more and more considering those shares.
All right, I understand what you're saying, and I agree that is something that investors should be aware of, that the convert, as you get closer to the convert, the market starts factoring in that the dilution is a reality, even if it's years away. However, Sparky, let me play devil's advocate for a second. How come that did not act as a ceiling on Cinemark?
Well,
it was able to run up twice the convert price and
well, yeah,
stay
but
there.
I don't know that you can. I don't think
I know the answer. I've got an answer. I just want to see
I
if you
would
can
say,
defend
I
your
don't know that
thesis.
hasn't happened. I would say the price it's run up to reflects what the market is going to assume the price is of the shares after the convert gets converted, because all those shares are going to go in. And if the company ends up buying some back, which they talked about doing and everything, that may end up happening. But I just to be an advocate to your devil's advocate, I'm not so sure Cinemark wouldn't have gone up higher except for people pay attention to that.
Yeah. So here's the sticky note I will add to your general comment that converts kind of flatten the potential price action once the price starts running up as the market factors in that dilution. Yes, that is true. However, the price will still generally follow expectations of earnings, which is why Cinemark ran up. If you think back to when they sold those convertible bonds back in 2020, everything was in the shitter,
Yeah.
and the price was, there were no earnings. The price was heavily suppressed due to the entertainment industry being shut down, and they got an artificially low convert price
No,
in the scheme of things, right?
I guess I was maybe being too simplistic. So you and I think, are in essence saying the same thing. What
Yeah.
ends up happening is, I don't mean it curbs it down from, it does, I think, and this is always what I get on people a little bit, just talking about not even MOAS, it's just squeezes in general, is people got to remember squeezes are very rare things. They really are, especially hard squeezes like an AMC or a GME. They happen, but the problem is once they happen a couple times, they happen because the people on the short side were definitely caught off guard and way out of position. I think the more that's happened, these guys aren't stupid. They start not taking as big a risk on the other side too. I mean,
Or they come up with other hedging strategies.
Exactly, or they come up with a cheap way to do it, which they obviously never did with either AMC or GME, is if they're going to be that short, maybe they buy some calls that are 200% out of the money or something because they cost nothing, but at least they spend that money and have some protection. And that's
Right.
Or depending on the IV, you take puts instead of doing a direct
no,
short.
but I'm saying, but at least I don't think there was any awareness of that in either one of those situations, and I'm sure there's been other ones too because they just weren't worried about it. The money was so free, they just kept selling calls and doing that. And I think the other thing happens too, and even though it's hard to show it, my guess is the regulatory oversight of these guys, even though everybody complains, oh, the SEC doesn't do anything, FINRA doesn't do anything. My guess is
Don't forget FBI and DOJ.
But I'm just saying seriously that my guess is there is a much, especially not necessarily from the government, but from the prime, from your prime brokers or your clearing brokers, there's a much closer watch on how far a hedge fund or somebody is swinging one way or another, because they end up being the ones that are on the hook for it. If a hedge fund blows up and they go to zero, it's those clearing brokers that get caught with whatever's left. So I would guess there's much more scrutiny and observation of positions than there was during some of the ugly times where it seemed like free running.
Carlos has a question for me, and I'm going to give you all a swing at it too, but I'll go first since he asked me. Do I think Ryan Cohen will keep diluting until he makes the naked shorts whole? I think that is his plan, Carlos says. I don't buy into any theory that CEOs are helping shorts, Carlos. I think CEOs are trying to do the best thing they can to set their company up for long-term success. And for GameStop, with declining revenues, non-profitable stores, yada, 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 and very thin profit margins, as we've gone over, ROA, ROI, ROIC, and minimal earnings, even with interest, 4.5% interest is not going to get GameStop the price that anybody wants, including myself. Interest I'm talking about on treasuries. The way for Ryan Cohen to pivot this company into something transformational is to stockpile some cash, cut the losses, which he's now done, and then invest that cash into something that generates meaningful earnings, market beating returns, competition beating returns.
Or can buy a real company with revenue, even if it's
Well, that's what I mean. When I say
profit or unprofitable, I think of Chewy, where they have the potential going in and finding a damaged company that's still a good company with revenue and maybe needs to be cleaned up, so you can buy it at a price that's reasonable and then turn it into something. I think ideally that's what the potential is, not to pay too much for something you're doing. But even with them, and I've been toying with trying to buy GME down closer to 21. I missed it by, and like you say, you always bottom fish. Sometimes you miss it trying to bottom fish. What was it, 21.10 or something? And I was looking at the demand zone I had drawn up, and I think I had all sorts of orders at 20 and a half or 20 and 3/4, and it just never got there.
Didn't quite get there. Yeah.
No, but that's the risk sometimes when you try to get, it's great when you cherry pick something 10 cents from the bottom, but you also miss some once in a while.
Yep.
But my point is, I don't, with that company, they're not going broke. I never think they're gonna, but I think you have a chance to buy it again, because at some point there's going to be rumblings that a deal's coming or they're going to buy something, and even when they do, they're either going to have to generally put on debt or is like swap shares with whoever they're buying if it's a public company. So I think you're going to have an opportunity to then look at it and say, okay, where is it now? Does a combination of these two make sense to jump in and ride it up? Is it a little bit of busted company? Is it something flying that he doesn't need to do much with, and then evaluate the whole piece? You and I are talking about the other one. I think that's part of one of your topics tonight. Is I'm trying to figure out that what was it, RALF or whatever, combining with. I'm trying to figure out what the combined, if they can get that merger to go. That's
no, the Railtown. We're going to get to Railtown.
No, but I'm just saying, but that concept isn't any different than what GME's trying to do.
Absolutely.
They're going to announce, hey, we're in talks with these guys, or they're going to announce we have a preliminary agreement to buy them, and you're going to be able to look at it and try to figure out if it's worth jumping in the other side or jumping in the GMC side to see if there's some value there. So
part of the reason I'm making the Railtown videos is not because I care if anybody invests in Railtown or not. Maybe it ends up being a good trade. It's an interesting possible speculative bet, but how that type of acquisition strategy plays out could be very germane to understanding what GameStop might do. Yeah, and Carlos asked, I think it was Carlos asked, will Ryan Cohen keep on diluting? Will he keep diluting? Will there be more dilution? If the price goes up far above fair value, you should expect more dilution. Remember, CEOs want to sell when they think the shares are overpriced. That's their preference. They don't want to sell when things are cheap, when they're forced to do it, like Adam Aaron, he keeps on getting stuck having to sell at the bottom. They'd much rather prefer to sell at the top. And Ryan, every time he sees the price get pushed up far above fair value, I don't care what the YouTubers say, they don't think that $30 is fair value. Ryan knows it's 2x fair value. He's going to sell shares there, because as a financial manager, that is sensible. It is smart, and you should expect it. And stop.
Think of all the times he has done the share sales. It's been every time the Roaring Kitty stuff, everything that's gotten way out of proportion with fair value. He's come in and said it's a great time to collect money to finance the company and do anything that I want to do with it.
It's not because he's trying to stop your short squeeze. It's not because he's trying to help the shorts. In my opinion,
run a company.
He's trying to set the company up for long-term success. He's made GameStop bulletproof. Now, they still have work to do. They got to invest that money, but he's done a phenomenal job. You can only be mad at him if you're listening to goofballs telling you that this is going to $3,000 in the next 12 months. And those goofballs exist out there.
Yeah, no, they're out there every day.
The investment part is the part that keeps worrying me. Is like he hasn't shown any sort of particular game plan. He's talked about the trading cards and things like that. And I think there's ways that they could drive sales there. And I've talked about it before on your show, Tony, about having some of these maybe like trading card tournaments, like your normal GameStop, your local stores, some of that, get some of that clout with the community and things like that. And it wouldn't be that much of an expense to run those. It would drive foot traffic.
Maybe that's what he's going to do with this push start.
I would hope so. That's been always
but
where I
wouldn't
think
you agree that's just a nice potential accessory or extra? I mean, these are nice little marginally additive businesses if he can get them to work. But I still think for the stock price to stay in the mid-20s or try to push up, he has to do something. You gotta find something else, and it could be completely unrelated to gaming or anything else that you have a business, and then any little incremental, if you get positive cash flow and profits from anything else, you can do all sorts of fun stuff chasing little ancillary businesses because you have the capital to do it. But every dollar they try to put in anything right now is so important that you can't waste it on frivolous stuff. You'd love to have something be profitable enough as the nut of your company that then you can go.
I'm going to bring up a meme that I know my some of the, I don't know if they're still chasing it, but the joke going around about this time, I think last year, was that the reason Ryan Cohen was loading up, and a couple of them, it started out as a joke, and then they were thinking, maybe that's kind of serious, GameStop going out and buying Newegg.
I thought he was loading up the cash to make all the BBBY people whole.
Yeah. Well, he's gonna buy BBY. Isn't that what he was gonna do? And buy Mullen. Buy both those things.
JP says, in my opinion, GameStop is strong. We're going to pivot after this comment. We're going to pivot to AMC for a minute and then on to some other tickers and other questions you guys have. JP says, in my opinion, GameStop is strong because of the people that never sold the stock, and he was able to dilute time after time at high prices. Otherwise, Chapter 11 long time ago. I mean, GameStop has, without a doubt, one of the most fanatical fan bases of shareholders, which has worked out well for them. And as the company, they've been doing their fair share of work to close down money-losing locations. Ryan's done a fantastic job of cutting costs. He undid all the bad decisions that the previous board did. Takes a while to do that, but you got good management going on, good fiscal management, good cost oversight. You got a fanatical fan base of shareholders who keep on buying stock as the company needs cash and offers stock. And you have institutions and big money getting on board also because of volatility. And now they have volatility and safety because GameStop's not going to go bankrupt.
I will add one thing to that because it's interesting. I happened to have a chance to talk to my dad today, who's 86, and he did run stock money his entire career. I mean, it's not an accident I'm in this business, but he was not a bond guy. He was a stock guy. And I wasn't particularly talking about GME or AMC or anything like that, but I asked him, I said, the stock market in general seems to have changed so much. Is it fair to say that retail probably owns more stocks than they did 10 or 20 years ago? And he said, absolutely. And it's kind of coming back to what I think the point you made is there are pockets of retail investors that have, together they've got a lot of powder and they're getting in some of these things. And that is different from maybe what you would have seen 20 years ago where people just kind of pick the, top Dow stocks or something. I mean, the Dow is almost irrelevant now, but it used to be what everybody was in and out of.
The cool thing is if Ryan does something intelligent with that cash, which he said, as long as we don't do something dumb, as long as he does something smart, and you have the right level of patience and time frame outlook, this could end up being a really, really good company. And that is, something you can be positive about. Everybody should be positive about that. But there are a lot of people that are still flipping weekly options and expecting Mo around the corner. Just talking about nonsense stuff. I hear the GameStop YouTubers saying, "Oh, look at the skyrocketing short interest," even though we've explained, Sparky, so many times that the short interest went up because of the convertible bond hedging. It's not because they're betting against the company, and none of them are scared because they all are going to get shares.
If the price goes up, the short interest will probably go up more.
Yeah. And why? Because they're hedging bonds, of which they will get free shares from GameStop if they convert. So they're not scared.
And even without converting, the value does match. Look at the CNK bonds at 211 or whatever they today. That is, they actually need to hedge because the other side, what they're long, is going up with the price.
Yeah. So just to have the right patience, the right timeline, and buy when it's convenient to you and inexpensive on the cycles of the chart, and sit back and then cross your fingers like I am that Ryan does something intelligent with the money. That's the bet right now. And I don't need to tell you $1,000 or $3,000 price targets like the I'm going to call them the BBBY pumpers of GameStop. You know who I'm talking about, Corex? These guys that they don't look at anything from a common sense finance
using
perspective.
Their rent money to buy weekly options like a dipshit.
Or just telling people, buy every day at any price, and I guarantee you, they say that this will be at $3,000 in the next year or two. Based on what? Based on what earnings? I mean, show me the math again. Where's the earnings equation that gets you to a $3,000 price target? I'll wait patiently for that video. All right, let's shift to AMC for a second.
I saw the short interest thing come
Zachary says short interest is now over 66 million self-reported. And I just want to put this chart up here and say a comment, which is not going to go over very well. So I'm sorry. But there are people out there making videos saying, guys,
I missed the days when the short interest was low enough that I could arbitrage the difference between the AMC short interest and the overnight Fed Treasury rate and make money off the interest.
there are people making videos that say, if you look at the number of shares short, it's gone up from over the last 3 years from 10 million to 66 million. The shorts are scared. Well, newsflash, no one looks at the number of shares short.
Well, and
you look at percentage of the float short. And the reason that the number of shares has gone up over the last 3 years is because the float's gone up how many times? Shares. 20 times, 30 times? I don't know.
The other thing I want to add to that, and I know, Tony, you and I message back and forth on that, is you got to remember in this settlement, AMC just did, there are going to be 79 million brand spanking new company issued shares, not fake, everybody says. So the float's going to be 510 million, and the short interest, that's going to drop it to, I think, 12.5 or 13%. I'll have to look at what it is. Guess what? It's right where it's been.
Yeah.
And the nonsense about self-reported irritates me because it is calculated and estimated daily based on volume and different things, but it is an actual reported number twice a month. And you can go look at it, and it's not fake, and people don't lie. And
well, people might lie, and the data might be fake, but that is all just opinion. And the point is, Sparky, everybody in the market with a lot more money than us is using this official data.
Well, that's the point.
So if you want in your little bubble to ignore market data that everyone else is using, people with a lot more money who can move these tickers around up or down. If you want to ignore data that everyone is using because someone told you it's self-reported, then that is certainly a choice, but it's not the wisest choice in my opinion.
It's like if it would be like to look at AMC share count number and be like, oh, well, that's just self-reported by AMC. It's like, no shit, it's the company.
It is. It's self-reported, Corex. Everyone knows there's billions of shares out there. self-reported.
But
And
facts
again,
we don't like.
that's why I have to stay off of Twitter.
I know. Look, I don't care what opinions or beliefs or conspiracies you guys have. You're welcome to all of them. I'm not going to try and talk you out of them. But if you ask me a direct question, I'm going to give you a direct answer of my opinion. And at the end of the day, I looked at all of those theories for a year with you guys back in 2021. And after a year of in the trenches with you, I realized that all of that didn't help us one damn bit. It didn't matter. Anything that we thought. Only thing that mattered is the company financials and why are shorts attacking the stock. That's all that matters.
The other thing I look at, and even if that number's not spot on and it's fudged, or there's ways people get a little around it, I do look at the cost to borrow, which is not something that can be fudged, because you can go look at a number of places and see where you can borrow shares, and right now on either one of these securities, it's like 0.5%. That means there's plenty
it's super liquid.
That if somebody needs to borrow them and deliver them, there's plenty of shares. So,
Sparky, here's one for you. Zachary says, my concern is AMC keeps losing settlements and giving concessions. Why didn't AMC's lawyers do better last year for bonds?
Well, I think they're
go ahead.
I think they're doing. Actually, and I've said that on your show a couple times. I think the AMC bond lawyers get an A++ for everything they've done the last 3 years, keeping this company alive. To the point, some of the stuff they've done, I think, has been fringe. I don't want to say illegitimate. I mean, everybody pushes the edge of what they can do, but obviously in this case, with this deal they did, the bondholders, the debt holders, not the convert guys, felt like their covenants were stomped on and took them to court. And obviously that in going back and forth, this stuff's all negotiated. It doesn't end up like, CSI on TV or something, in the course of negotiating this issue in the courts, I think the company probably knew from the get-go this was in the gray, is probably the best way to put it, that this may fall apart or they might have to make some concessions, but they had to do this. At the time they did this, this was their only option.
That's the problem, right?
AMC. This is just repercussions now of having to pay back for it. But
back in 2023, we had the issue with Ape when the company was out of shares and running low on cash, even though people still want to debate that Chapter 11 was never going to happen. It was imminent. Within a couple quarters, they got themselves out of that and, survived till this year. But they had the issue of the 2026 debt coming due, and they needed to push that debt.
Tell me if I'm wrong, but I think the issue that kind of started this whole thing with the bondholders was the creation of MovieCo. Remember, they moved in order to force the last bond.
That's what I'm saying.
They and transferred all the assets.
That's what I'm saying.
They moved all the assets. So
that's what I'm saying. They got stuck 2 times. They got stuck in 2023 with one situation, which was running low on cash and out of shares. They fixed that with Ape, which was creative and it pissed people off, but it allowed the company to survive.
I think it was brilliant.
And then last year they were contemplating in 2024, hey, we got billions of dollars of debt coming due in 2026 and we need to restructure this somehow. And they came up with the MovieCo thing, which was again creative, and it pissed some people off, but the people it pissed off were the actual bondholders, like you were saying, Sparky. They felt their covenants were stomped on. But what was the option that AMC had?
They didn't have it. No, that's what I'm saying.
You're right. There's no option.
Brilliantly evil. It's the way I put it, but it was necessary. So.
The alternative is Chapter 11. I mean, they did what they had to do, and they, in 2024, restructuring the debt and moving it to MovieCo, and they took their licks 2 weeks ago, July 2nd.
I'm assuming when we get to December, they're going to ask for and get a share increase. I mean, because they almost have, because they're in the same spot. If they don't get it, they're probably in trouble. And then they'll restructure whatever left they feel they have to do at that point. And obviously, if the numbers are better coming in, it's only July. If the numbers are great coming into the end of the year, that takes a lot of pressure off because it gives them, I would think, more maneuverability in negotiating whatever they have to do to fix. I think if the numbers are good and they actually squeak out, God forbid, a little profit and have some cash flow, that is better for the debt holders that are still there and lets them,
That's the big
not
question.
put
Do
the
they ask for
not
more
put the
shares, or do
screws so hard
they
to the company and the shareholders, I would think.
do they do the reverse split, because that might give them that they have to dilute less in the long run because they have the higher share price when they reverse split?
I think they would rather not do a reverse split just because the connotation of that, but it's the same thing. If they don't get to, they leave, and Tony, you know what the numbers, what do they got, a couple million that's kind of hanging in there. Maybe they created a little bit with this last exchange they did for shares. If they don't get a vote, the answer is going to be they're going to do a reverse split, and depending on where the stock is, it might be 30-1 or something, and then people will really be unhappy with it, but they're going to be forced to.
They've got to have something on the proxy, either a request for more shares or a reverse split, or they might have both so that people could choose one or the other. I don't know what it's going to be, but they got to ask for more shares.
But it's going to be the reception of that will obviously be better, whatever it is direction they go, if the numbers are
if Q4 is looking good, which might be why they decided to have the vote in December.
Yeah, well, which would make sense to me if you think it's going to be better. And
certainly looks like it's going to be a good quarter.
They have shaved some interest costs down doing some of this other stuff, and that all little, a couple million here and there. They're not that far unprofitable, so maybe they can turn a little bit of profit, and it just looks better.
Also, not to completely rain on the parade, but correct me if I'm wrong, Tony, the 8K also said that they had 90% of the people on board with the deal.
Well, that was the bondholder.
The other 10% that still haven't.
Well, I think that was that class of bondholders only, though, right? I think that was fairly selective.
We're talking about the July 2nd.
Yeah, where they said they had 90% approval for it or something. My guess is it's all, if you're a bondholder and they're going to unwind debt and raise cash, I think everybody should vote for that.
Yeah, the only I was talking with Corex about this morning briefly. The only thing that I don't know yet, AMC in their press release this morning. Oh, by the way, I woke up this morning and saw that filing, and I opened it up and I started reading it. Let me see if I have any thoughts I want to share on video. And then I looked over on the right-hand side of my screen, 880 pages or whatever the F it said.
Yeah.
Like, what? No,
not this morning.
I'm not about to spend my Friday reading 800 pages, but I will get through it, guys, this weekend. Hopefully it is mostly documents that I've seen before. But when I have had time to go through it properly, then I will share any thoughts. But it looks like today's filing was mostly just confirming that what they announced on July 2nd is finished. And they said that they got what was the phrase, Corex, a full release from the concerned parties or the
class.
Well, that's good that they worded it like that. Now, can we please see it on the docket?
Yeah. Does concerned parties mean all parties? Like
or just some of the parties, or the majority of the parties?
I want to know, is the lawsuit done or not? So we're going to follow up.
I haven't seen a notice of dismissal.
Well,
until that.
You saw AMC had a big announced big company release today. Hey, the thing closed. So I'm guessing
that's what I'm talking about. The 800 pages.
But it just was a recap of what everybody already done. But I'm guessing, because I know I've been waiting to see when those 79, 80 million whatever shares get actually counted, and I'm guessing the actual exchange probably happened today. So
let me see if Dilution Tracker picked it up.
Because that would be what I would consider a close. People are turning in their bonds, and then exchange they're getting shares. That means the deal is complete. There's no more details for that portion of it anyway to be litigated or discussed or negotiated. It's done.
Dilution Tracker has the 79 million on here, but they're not showing it as in the float yet. But I bet they will next week, because the filing just happened today.
That's what I was going to say. I don't remember I know I talked to a guy at Chart Exchange at one point, because they seem to be a little faster getting stuff up just when they were doing dilution in general. And he says they they don't put anything up till they get the actual legal notice that, every step checked off, and then they
Right.
put it in there. And that doesn't happen in 2 seconds. And you said
That's
read
something
that-
to be aware of when you're looking at your brokers. Man, good Lord. Corax. So did you see all these people this week saying the float on Mullen's only 10 million? And
Yeah.
Kendall kept on posting documents from the company saying the float's 230. No, it's not. On my broker, it says 10 million. Guys,
I love Mullen filings because they are even sluggish about getting around to how much dilution's going on in that shit show. Kendall's always posting new shit.
the float that you see out there on your broker, they're just getting data and putting it on a screen. Data from a data
that they
consolidator.
have to scrape from somewhere.
Right. They scrape it. They pay for a data feed from a data consolidator that reads all these filings. And depending on who they are using, the float you see on your broker might not be timely. It might not be correct. It might not be updated for weeks, which is what I love about Dilution Tracker. All they do is make sure they go through filings every day and update share counts.
Well, you just have to remember, whether it's Schwab or whoever the kind of retailish broker is, they're handling updating this information literally for 3,000 or 4,000 stocks, if
Right.
not more, and then countless bonds they price and try to update stuff for. So it just is not going to be instantaneous.
Also, it depends on where in the filing and what filing it was. What type of filing? If it's a 10Q, I think their AI bots can go pick out the current shares outstanding very easily. But if it's a prospectus or a proxy, depending on the data consolidator, they might not be looking at those filings.
Or if it's like an 8K where it can just be a press statement, if there happens to be an update to dilution in there, they're not going to know, because an 8K is the almost the do anything filing.
Yeah.
If you got a press release, if you just got a statement, if you want to say something.
And now we got these companies like Quantum where they're only filing certain filings in Canada on the CSE or CEDAR. And again, your
foreign companies,
your broker's not going to have the right share count. And the CEO of these companies certainly aren't going to tell you the information. Yeah. But when I go pull it from the Canadian filing system, all of a sudden I'm the bad guy. I'm the FUD. I'm literally sharing a company document with you.
Corax, you might be the right guy to ask for this versus even Tony. Is when there's 20 million Mullen shares that trade in a day, and I realize it's a 6-cent stock, so it's not, you're talking about a couple $1 million in actual dollars that change hands. Who's actually, you think, trading this? I mean, even if you're retail, do you try to buy it at 6 cents and sell it at 7? That is 10 times a day, or what?
I know who's the sell side, the warrant holders, but the buy side, that confuses me too. Who's buying this?
I'm not the only one that look at this. I'm like, who's? Because there's obviously people that want to sell, like you say, warrant holders, or they're trying to just, without killing the price, they're trying to sell 1 million shares every day.
I've noticed there's been like a cycle. There's like some main grifter that's usually doing it. Like, man, I forget now. We're like 3 stages deep. There was one guy who was hawking it, and then they brought a new guy in, and I'd have to go back and look at it because there's several YouTubers. And now the only person that I know that's hawking Mullen at this point is Scam Investor. So like,
well, that's I don't know if he's hawking it, but I think, DG is at least talking.
He's giving it attention that it doesn't fucking deserve.
They are telling people that they expect it to bubble up, which tricks people into going in and buying something while you're getting a Gatling gun shooting dilution at you every day directly from the company.
If you think about it,
well, if you can buy something at 7 cents
and sell it at 8 and have 12% profit in every trade, that's great. But there's, and if you did $1 million if you were big, I'm just saying you're a big, you got Tony DeNaro's money, not yours or mine, correct? So you're just taking your $1 million and bidding 6 and offering it 7 and just hope you get it done every day. You still have the risk that it can go from 6 to 4 the next day, and you give it all back. You don't want to go home overnight, I don't think, long anything like that. Certainly not 5 million shares.
I would say, Sparky, the same people that buy bankruptcy plays. There are always people that think something's about to turn around, and they're willing, because it's super cheap, to go in and put
And
some
I
money
guess
on
it's,
the line. But
like I said, notional money, 20, 25, 30 million shares is
how many times
$5
can you
million.
bash your head into the wall before you learn?
Gotta average down. Average down from 20 to 6 cents.
Kind of average down into oblivion. Hey,
Hey.
you should go show that all-time chart, Tony, on Mullen. Yeah, average down that.
Thanks for the discount. Thanks for the discount. What's your favorite phrase out there?
What was the high in Mullen at this point? Like $2 quadrillion or
Yeah,
something
that's if Bloomberg doesn't even count it anymore, because it goes. I figured out it goes up to like 20 billion. So it doesn't. On the graph it doesn't show it anymore. Whatever the up and to the left is, it has like a bunch of dots because it won't go over 20 billion or something.
Wow.
We got to put it into scientific calculator format.
Do y'all have any other questions out there in the audience about AMC before we move on? I'm not talking too much about Q3 box office because I think July is going to be great. And then I don't know so much about August and September, but we did go see Fantastic Four.
Yeah, you said you liked that.
I did like it. I had low expectations because most of the previews I saw didn't really speak to me. But we went in there and we both really enjoyed it last night. I like Superman better. I'm going to go see Superman again. It's going to re-release on IMAX in mid-August.
See, that's what I'm waiting. I love we don't have an IMAX in town here where I am, but I love watching movies in IMAX. I think that's such a better experience. And actually going along with what we're, the positive for AMC, if they put more of that stuff in, I think it'll be helpful. It might take a little while for it to catch up to bigger numbers, but I love watching stuff in the IMAX format.
And it's something that you can't get at home. Like that's always been the theater experience, and that's why AMC's having to do all these renovations, is because as a theater, you're now fighting against the person who can have a 4K television at home at a reasonable price and have a pretty decent price speaker system. So you need to have something that is above that. So having this sort of IMAX, Dolby Digital, like surround sound, all this stuff that you can't get on a budget at home is what you're competing with. And that's what's going to drive people out to the theaters is that. So that's an investment they're going to have to make.
I would just say, for Q3, go see as many movies as you can. If you like movies, that I do. I like movies. People get mad at me for posting movie reviews. I like to watch movies. I always have. And even been in a couple Korax, believe it or not. But
I'm going to have nothing to say on this if that's what you're doing next, because I have no clue about any of this. I'm just going to sit here and listen.
We're gonna move on and talk about Railtown very briefly. Not because again this is a penny stock. You guys know I don't talk about penny stocks on my channel, but one YouTuber in particular decided he didn't like my opinion on Finger. Finger, by the way, I tweeted back in December that I bought it at $1, which everybody seems to forget.
Finger.
And then I bought it at $1.30 here. This is Finger. I tweeted this out. I mean, this wasn't a secret. $1.08 and $1.30 was my buy-in after the dilution on Finger. And then it ran up, and as it was running up here in May from $1 to $5, I sent out a couple tweets saying you might want to think about taking some profits off.
Just might.
Oh Lord, do you think that I said that Ken Griffin was my next door neighbor? All of a sudden, I'm the bad guy for reminding you, if you were in at $1 and you're up 300%, 400%, 500%, maybe consider taking a little bit off because it wasn't going to last. Especially
while you're pointing all that stuff, Tony, can I answer Zachary's question about AMC board?
Let me do my lead in of how I got into Railtown.
All right.
Because somebody decided to start saying every day on his 5-hour live streams that because I traded intelligently on Finger and then told you consider taking profits, because I said that, I must work for the shorts. And then he'd go on rants all day about how I work for the shorts because I was 100% correct about the dilution here for finger and about the next dilution, but I work for the shorts. Okay.
I will say that Finger Motion is probably one of the most accurately named stocks. It fingers its investors constantly and not in a pleasurable way.
I like Finger Motion. I like the CEO. He's not chasing the naked short nonsense. He has people out on social media that are, but the CEO is very upfront and all their filings are very transparent. And I have nothing bad to say about this company whatsoever, other than, and this is not bad, you need to disconnect from social media and just look at the chart. That's all you need to do.
I'm kind of half and half because I will take what you're saying, Tony, but they did pay for some of these people who are out on social media.
Okay, but all companies need to get promotion to raise money.
I'm just asking, could you please pick people who are a little bit more honest?
Right. The people are not honest, and that is a problem. But the company itself and the CEO, if you listen to them, very honest, very transparent. If you're trading the stock, I've been trading it for years. If you in my Discord, you already know this. Many people in my Discord have traded Finger because it's a high volatility stock. Just unplug from social media nonsense and play the chart. The company's losing money. They're going to keep diluting. You got to understand that and then be intelligent about your trades. And as it comes down, I'm watching it, guys. It's getting closer and closer to this demand zone. It's getting my interest again, but it had a 24% run today. So I don't know. I don't know next week if this was a bottom here at 160 and we only go up, or if I'll get another entry down here below 120. We'll see. But if I buy it again, I will certainly let you know. I watch it. I keep up with it. The YouTubers who piss me off, once they start saying bullshit, lies, slander, that I'm working for these shorts, nobody pays me on the long or short side on any ticker. Once they start saying that nonsense, I feel like these guys have something to hide. They want to lie and slander people to cover up whatever nonsense they're pushing. And that makes me want to dig deeper into them and every ticker they're covering. Surprise, they covered GTII, MMTLP, CRTD, every stock that ended up in the dumpster. And one other ticker that was being covered by the same person was Railtown. And so I said, well, let me look into Railtown. And so that's what I've been doing for the past 2 months. And my Discord's probably tired of me. My Discord's probably tired of me, feeding them little daily updates on my DD on Railtown. And if you've been observing in the Discord or my videos, my story is getting better and better. The more I dig into this company, the more I like it. So I'm going to talk about why I like Railtown in just a second. But first, I want to allow Sparky to say whatever he was going to say.
Oh, no, I'm sorry. There just was a Zachary.
What? Go ahead. Go ahead and answer it.
Well, he's just talking about board members maybe not being able to buy shares to be privy to inside information. And I'm just going to bring it up. It's true of any stock. There are periods of time, especially when there's corporate actions going on. And right now, AMC obviously has a lot going on because they've been doing an exchange and there's been a negotiation. And that does preclude insiders from either buying or selling stock, but it generally is fairly short. You don't have to worry about them not being able to buy until 2030 just because they have a converter somehow. Yeah. But there may be a couple week blackout where they're not allowed to participate when they're in negotiations with bondholders or an exchange and in deals. So that the answer is yes, they can be, but it's not a 5-year blackout. It's that if insiders of any company over the course of time aren't buying shares, that's something you need to at least think about.
My thought on that question, Zachary, is very simple. They're not buying because they know that they need to keep raising money.
Right.
And you should pay attention to that. You should pay attention that they're not buying.
They're not buying because they realize that the price isn't at a good spot. And like Tony said, they still have dilution to do. if they'll buy when they know things are moving in the right
when
direction.
when I see them buy with their own money, I'm going in, because that
Yeah,
means the
that'll
worst
actually
is
be a
over.
great signal if
It
you
will
see
be a
that.
great signal.
If you see somebody exercise options, or you see especially if you see a slew of insiders all of a sudden in a filing, there's 4, 5, 6 of them, even if it's not a lot of shares, that's usually something to pay attention to.
All right. JP says, William loves me. Yeah. Someone sent me a clip, William, JP, that he was saying I compared Railtown to Nixie, which I've never commented publicly about Nixie once. I think the only thing I've said about Nixie is I'm looking into it, and I want to see their next quarterly earnings, because first of all, I haven't even had time to do the full DD. It takes me sometimes weeks to do all the proper analysis on these companies with the amount of reading and stuff that I do. So I certainly would not have compared Railtown to Nixie. I did not. And William, if you can find where I did, I'll send you a check for $1,000. So in the meantime, all your fake outrage is just embarrassing. And again, ad hominem attacks and slander just make you look bad, because you say you don't watch my videos, but then you spend 5 hours complaining about me with false information, like I compared Railtown to Nixie, which I did not. Here's the deal with Railtown, guys. This is a penny stock, and if you've watched my channel for any length of time, you know that I don't generally talk or promote penny stocks, although we might trade them. But these are super high risk. They're some of the riskiest of the risky, and I've just learned over the years that a lot of people don't want to take accountability for their own decisions. They want to blame somebody on YouTube. So why would I talk about a super risky play? Doesn't mean that I might not like it or I might not trade it. In fact, William is going to be even more embarrassed when he finds out that I'm long on Railtown while he's saying I work for the shorts. What I have not told any of you guys, my Discord knows this, is that I'm actually long in the stock. William, how about that? I work for the shorts, but I'm long on the stock. Okay. You are a fool. You're just spewing ad hominem attacks, false information, slander, because you don't like someone else having a different opinion or someone trying to teach. You want to push your pie in the sky stuff, and that's fine. Push it, and hopefully it works out, because if it doesn't, it's going to be one more thing where the folks with pitchforks and torches come after you like they do every day for pumping GTII and all the other tickers that you pushed. No revenue companies. This is the bad thing about Railtown. The only bad thing is they're what I call pre-revenue. They have customers. Yeah. They have customers, 1,150 by their corporate documents. And I have talked to the company in email and then on the phone, 30 minutes, one conversation, and 1 hour. These were phone calls this week, one hour, and then the next day, 30 minutes. And I asked them a lot of questions, and I appreciate them taking the time to answer questions, but they are pre-revenue because here's their words. They are strategically building their customer base, if I could summarize it. And at some point you try and monetize your product, but sometimes when you're a new entrant, that's difficult to build up the word of mouth. Go ahead, Sparky.
No, I was going to say, just because this is, talking with you is the first time I even ever saw this situation. Is the risk on this, especially where it's trading right now, that it just takes longer than maybe the market would expect, or even you expect, to get a deal done or something put together, that the stock could fall back down into that previous?
They announced the acquisition of AIP. So we got Railtown, which is a pre-revenue, i.e.
Right.
no revenue company with a legitimate product, which I like. I like their AI pilot that helps software teams decrease the software development time. It's a cool product, and it probably has some useful applications out there. They are trying to acquire a larger company that supposedly has revenue, that has affiliates underneath it, 160 affiliates of other AI companies. So this pre-revenue public company, wants to acquire a private company that has revenue. So there's synergies for both of them. You see what I'm saying, Sparky?
No, exactly. So the risk that you don't get a pop at least right away is it just takes them a while to figure this all out. And
it's already run up from 20 cents to 70 cents, 69. Right. So that's a good pop. But what we want to know is the deal likely to go through? Because look, we've all seen companies like GTII or Mullen announce these acquisitions or partnerships that just end up being vaporware. Am I wrong?
Yeah.
Am I wrong?
No, not at all.
Now, I'm not saying that Railtown is that company, but and I'm not. I have said
there could be nothing nefarious in their announcement or anything else, but sometimes just mergers don't work.
But sometimes mergers don't work if they can't agree on valuations. But I think that based on the competent and professional management teams of both Railtown and AIP, this looks like one of the best, most likely deals to go through that I've ever looked at in these type of companies. Yeah. And I've been very critical on Mullen and GTI, unabashedly critical. I've not been critical on Railtown. I've said the opposite. I've said, I think this deal will go through. And I've said, I like the management teams. People don't want to repeat when I say that. They want to complain for 5 hours about stuff they make up, saying I comparing Railtown to Nixie. Like, how about you actually listen to my words?
So
if Railtown announced this acquisition in February, they said more details will be coming in the coming weeks. And now we're in July. So people are wondering, why is it taking so long? And as I was talking to management this week on the phone calls, I asked that question, and they went back through with me the story all the way back several years ago of how they were looking to fund their company and leverage it for growth like any startup would. And I've started several companies. I get it, not to this scale, but I get the struggle, and I understood everything he was talking about. Then they came across this opportunity with AIP, and it's a match made in heaven. AIP gets to have access to public markets, and Railtown gets access to a bigger bucket of revenue. And
it's sort of like a reverse merger almost.
Yes, but that was the next step that I kind of walked into. Okay, when you got a company like Railtown who's only got $2 million in cash and no revenue, how do they buy a company with hundreds of millions of revenue? They could issue shares, or that would be bad, right? That would be massively dilutive. And they have an infinite supply of shares, by the way. I guess that's a thing in Canada. You can have infinite shares.
That's
that's what I saw on their filing, if I recall correctly. But
I did see it with like a couple of these other companies, like Quantum or yeah.
But what I've seen, again, I want to say something good to you guys about Railtown, just like I told their management team. What I have observed is they need to raise money. We know that because they're not making money. They have a going concern warning, blah, blah, blah. That's your heads up that they're going to need to raise money because they're not bringing in income. What I have observed is they have been very judicious about their cash raise. So they have done some dilution, but it's been minimal. When you compare it to something like a Genius Group, which files a shelf for $1.2 billion, I mean, we're talking a good management team here and Mr. Ridiculous over there in Genius Group. Everything about this, the more I look at it, the more I like it. Now, the only question is, how does the deal get done? Is it going to be dilutive? I just got through done saying that management seems to be cognizant about not overly diluting based on keeping their operations running. So what the conversation I had on the phone was, they said, look, we get it. The insiders own a lot of shares too, and nobody wants a massively dilutive outcome. And although we can't tell you what the outcome is going to be, you're really close, Tony, but you need to think about it a little bit more. And so I did think about it a little bit more. Obviously, they can't tell me how the deal is going to work out, but the other option that I had looked at was a lesser dilution solution, including maybe some pipe financing, issuance of debt, and a milestone-based earnout, one or all three of those. And that would be less dilutive. And so in yesterday's video, I went through a real-life scenario of another company who did that, Next Trip and Sigma Solutions, I think. And it was initially less dilutive, although once all the earnouts hit, and they have now all hit over the last 15 months, the original shareholders of Sigma, think Railtown. I'm not saying that, I don't know how Railtown's going to work out. I'm just saying, if it were to work exactly the same way, the original shareholders of Sigma now only own 9% of the new entity because of the earn-out milestones giving shares to the bigger company. And so that's something to think about. It could be dilutive over the long term, and that would be still a win-win, I think.
And I've seen a financing just in my broker days. It's not exactly like this, but what you could have, let's say you have fairly well-heeled insiders at the company that's going to be acquired. A lot of times they may be willing to basically lend, this is out of their pockets, not corporate-wise, lend money to the acquisition team, even if it's debt, but then you have, the probability that debt at some, fairly reasonable rate that gives them some return, but then also maybe some warrants attached on the back of it.
Yeah, warrants. I'm not surprised when you said there was a pipe involved. That even happens with like SPACs.
Well, we have no idea what is involved.
Well, I mean, the potential that, like the example company you gave was talking about.
I guess
I'm just thinking of a way that a company with almost no assets could do that. And the answer is, I've seen it where the insiders were just older, wanted to get out, were willing to take a little risk over time and basically fund the acquisition in a model where they had some fixed, they probably had some security in the company as debt holders, whatever you could get there, but then also had a back end, either warrants or maybe even future, long dated option that if the company does well, you get some payout on the back end.
I'm talking about this company because it's fascinating, I think, for myself to learn more and more about this stuff. And it's the best way to learn is do a live example. The unfortunate thing is that the other folks that are covering Railtown do not want anybody discussing the type of things that I'm discussing, because they are last Friday, guys, he guaranteed people that this stock would 10x on Monday.
No.
Yes. You can go look at his live stream on Friday at the end. He said, you need to get in today before the market closes because this thing will 10x within 48 hours. That was Friday, so he must have meant it was going to 10x on Monday. Today, he was telling them it's going to $50 or $100.
This has no revenues. I will ask, though, because I'm kind of curious. So they have sort of, like, what is their underlying business? You said it was an AI that kind of generates content.
No, it's a AI pilot, I'll call it, that assists software development teams in shortening the software development cycle, searching for errors, creating a task list for the project manager. Probably, I don't remember every single thing that it did.
Right.
But just think of it as a AI tool. You basically load your software into the tool, and then the tool helps analyze things as you're doing code development, and it
helps you be a better code monkey.
More efficient. It will cut man hours. It will be a cost savings. I think it's a fantastic conceptual product. So
as someone who's done coding, having some sort of AI that helps you deal with the mind numbingness of coding sounds like a great idea.
Yeah. Now it's not the only
Right.
entry in this market, but they have some niches, and I went over this in a video 2 videos ago. They have some company specific niches that are just theirs that give this company some potential and some value. So I'm excited to see where it goes. I don't hate Railtown. Like I said, I think the management teams of both Railtown and AIP look great. I hope this deal goes through. There are no guarantees that the deal will go through. As Sparky was saying, sometimes you just can't get there on valuations or negotiations, but every communication I've seen from management, and they're still, dribbling out tidbits, makes it feel like we're really, really close. And a lot of times you don't get those little tidbits dribbled out. You just get silence and then they cancel the deal. That's not happening here. Every indication I have is the deal will go through. So meantime, we can learn, we can dream, we can think, we can become educated about how do these deals work? What do we need to look for when they're announced to quickly assess what happens if it runs up from 60 cents to $2, $3, $6. Is that going to last? I can't tell you, but I'm going to be reading real quick. I'm going to be reading the details.
Something to be careful of. I noticed it ends in an F, and you said it was a Canadian company. Does your broker ding you on the buying of the foreign company? Because I know sometimes I've made accidents on Fidelity where if it ends in an F, which means it's a foreign company, you get this like tacked on because you're having to buy it on a foreign stock market more or less, that your broker will give you this ding charge of like, I know at Fidelity it's like $50 or something like that. Do they do that with this company?
I've been buying it on Fidelity, as I said. William, you are wrong, William. I'm not short. I've been buying Railtown on Fidelity. I don't disclose that because I don't want to influence people to buy a speculative stock. But no, they have not been charging any fees. Correct, to answer your question on Fidelity. However, not all brokers allow trading of this ticker.
Right. That's just something I wanted to make clear because I know in the past that's something that surprised me and I don't want people to be surprised if,
Not on Fidelity, and I haven't seen anybody in social media talking about any fees like that either on the other brokers that they're buying it on.
It's a potential acquirer, a U.S. company, or is this all Canadian?
It's all Canadian. And by the way, this ticker trades as Rail on the Canadian exchange. That's the primary exchange. The OTC market is a secondary trade.
So if Tony Donato was brilliant and bought this at 50 cents and a buck and it goes to 10 and you sell it, you owe Canadian tax on it then or not?
Well, that's another good question. I don't know.
I'm sure Fidelity will let you know.
I haven't done this forever, but I remember you used to do EU or Canadian companies, when you'd sell it, they'd do like a 20% withholding.
Well, maybe because I'm trading it on OTC in the US, I don't got to worry about that.
Well, you might not. I'm just saying it's obviously that'd be a great problem that you have to worry about paying 20% gain if you make 5,000% on it.
Yeah. It's a good question I didn't think about, which is why I love having these conversations because we get new things to dig into. I will check into that, but it's not a current concern I have.
That's probably just a question you could send to your, through the message thing. If you're on Fidelity, just say, hey, if this, if I have a gain, if I buy this and then turn around and sell it for a gain, do I have any, somebody going to come and send me a Canadian 1099 or something?
The good news is usually if you have some sort of tax that's a foreign tax, you can write it off so you don't get double dinked on both U.S. and the foreign.
No, that's 100% correct. But I remember, and I don't remember what the stock was because it was so long ago, but you had like on the proceeds, there was a 20% withholding. I mean, it wasn't even a gain. We made a couple dollars on the stock and they withheld 20% of it, which you got back a year later when I had to file I don't remember if it was Canadian or whatever it was. It may have been an EU return or something. I got it back, but I think it probably cost me as much just to unwind the thing and it took me 9 months to do it.
One other just interesting little tidbit that the management team told me is that they're thrilled that folks in the U.S. have eyeballs on their company because it's hard for Canadian companies to get liquidity.
Yeah. That's a big problem that like a lot of Canadian markets, and that's why they try and uplist onto US exchanges like the Canadian market, any of these foreign markets. Like they would love to be on an American exchange because the liquidity there is just so deep that they never get in their home country.
Oh, the other funny thing about this ticker, just one final topic. It has not really been pushed as a short squeeze, which I'll give folks credit for not doing that. But they show, Corax, you're going to crack up here.
Oh boy.
Every day he holds up a short volume report from Tom Ronk's website.
I have no idea who that is.
You don't know who Tom Ronk is?
No.
While we're sitting here, just Google Tom Ronk, SEC.
RONK is the last name.
I mean, Tom Ronk he's kind of like a ham short killer.
Oh, so he's got I already see it here from one of my favorite follows on Twitter. Securities Lawyer 101. SEC obtains final judgment against Thomas Ronk, former short seller opportunist.
Yeah. Not exactly someone I'd be getting trading advice from, but for whatever reason, these guys they are attracted like moths to flames to people who've been prosecuted and convicted by the SEC to tell them that, right? Look at this short volume report. Guys, short volume is not short interest. You need to spend some time reading about what short volume is.
Hey, by the way, shares available to firearms is not naked short sold shares either.
You're not kidding, Tony. What was it this week that came out? The Nikola Tesla guy getting glommed over by the MMTLP community because Tucker Carlson did a pump ass video.
Yeah.
Ridiculousness.
Hey, Carlos, I put the ticker in the bottom left corner of your screen there, RLAIF. I am long in the ticker. I'm hoping that they do a less dilutive solution. I'm hoping that the deal closes. I expect the deal close. I can't guarantee you the deal will close. And if it doesn't, then the price is going to get eviscerated. But every bit of work I've done over the past couple months looking into this makes me feel confident that it will go through. What happens, though, depends on the deal structure. What happens with the price of Railtown. But the other ticker, go watch my video from yesterday where I talk about Next Trip in Sigma and look at what happened when a acquisition was announced between those two companies. Look at how the stock price popped. That is a potential here. And for those of you that are degenerate gamblers like me, maybe you want to put a couple dollars on it. That is up to you. I don't promote penny stocks, so please do not ever come back here and say I told you to buy it.
I will say, if you got a little time, Tony, I want to. Like last time I was on, I think I briefly talked about Fannie and Freddie, and I just wanted to say I'm out of that trade, and I feel great that I took my 50% gain the way it's been melting down.
So what was the deal with Fannie and Freddie? They thought they were going to take them private?
No,
there's a bit of a long story on that one. So what they're thinking, what the deal is they're trying, like, it's been a Trump thing since his first administration that they were planning on taking him out of conservatorship and potentially, like Sparky said, recapitalizing the company. There's a bunch of preferred shares, the vast majority owned by the government, and then there's some that's owned by private entities. I was simply just doing it as a momentum play of buy the rumor, sell the news. So the minute that, it had that first run up, I got in. And then when Pulte was named, it did another run, and I should have probably sold there because it went up to I want to say $11 or $12, and that would have been like almost a triple up from where I bought in at around $4 or $5. But it started drifting back down because there was no news. Like they said after the big beautiful bill that they were going to start potentially thinking about it. And then the news came out that, well, we maybe don't have that as a priority. You even had Bill Pulte, and he was saying, well, we may not fully take them out of conservatorship. We might sell pieces of the company as a public entity, but aren't they already a public company? Anyway, don't think too hard on it. Like they've walked back the fact that this is a major priority. They've got other things they want to do, and the stock's been drifting down. There was a big pump today not today, 2 days ago, I think it was on Thursday or Wednesday when they had the board of directors meeting, and then it turned out to be a nothing burger. And then a new article came out and it just tanked today.
What is the ticker?
There's 2 tickers. So let me find it here. I have it on my list of.
Were these tickers that Pulte fans were chasing?
They have been. Some of the like MMTLP people have been chasing them. They're both on OTC. It's FMCC and FNMA.
FNCC.
Is it Freddie Mac and Fannie? And the two?
Yep.
Now
and I'm pretty sure Freddie Mac is the one that's worth less. The FMCC and Fannie's FNMA.
Because I invest in current debt, government-backed GSA debt of Fannie Mae and Freddie Mac, and Farm Credit System's another one. I do that every day. My guess is if they were going to go and do, Fannie Mae was very unusual in that it was a publicly traded funded company. If I remember right, Freddie Mac had shares, but they were all either primarily owned by bank institutions that were actually kind of forced to own them if they were going to be dealing with Freddie Mac direct, because they're a money center like central banks are. Fannie Mae was kind of the same thing for mortgages. I would think personally, if they were going to have a public partnership with the federal government again, where the debt would be guaranteed like Fannie and Freddie are, but there would be an equity component that's publicly available, I'm not so sure they wouldn't just start a new one. I don't know why they would go back.
That's the big problem they're having right now, is they want to be able to have the security of, hey, we're making this a public entity, but separate from the government again, but still having the security of, well, the government will guarantee it. And they're basically trying to square a circle now.
The only way that works is there's literally trillions of dollars of Freddie Mac and Fannie Mae and Federal Home Loan Bank and Farm Credit debt that gets funded at extraordinarily tight level. Literally, I'm happy when I can buy 3 or 4 year Fannie Mae or Freddie Mac debt that's 5 basis points over treasuries for a non-call. I mean, and you do it just because it's some incremental spread to treasuries, and it's basically treasuries. I think they're going to have a tough time going back and having a publicly owned company that has that same guarantee. It doesn't mean they aren't going to come up with something completely separate than that, but.
And the other big problem with me, and why I think it's more of a momentum play, you find a place after it's had its rundown again to get in again, and just catch the run up on the news that they're going to do whatever they decide they're going to do, is because holding Fannie or Freddie long term is a really big problem, because a lot of those preferred shares, I mean, you look at the financial statements, there's no revenue at the end for common equity holders. It's all gobbled up by the preferred shareholders. Like you look at the balance sheet, I mean the income statement, and you get down and it's an EPS of 0 and an earnings of like 5 million or something on a company that has huge revenues and has a great EV to EBITDA rating. But the problem is all the money gets gobbled up by these like 8 different classes of preferred shares they have.
But even that's only some little trickle down amount. The majority of the money, don't forget Fannie Mae, everybody that does qualified loans, Fannie Mae takes somewhere between 30 and 50 basis points. That's their guarantee spread. None of that spread gets pushed down to the preferred holders or multi-level holders. That just goes back in the pot for protection.
Right. Because they have to have something in case the loans go bad.
Yeah, I know, because they do. And that you're going to probably see that happen now. I mean, just when home prices go down, everything runs way up and people get all the loans they want. If you have doesn't have to be a crash, but you have a 5, 10, 20% retracement in prices, people walk away from their houses and
That's
Fannie Mae eats it,
that's
So,
the big thing. Again, why I treat it like a momentum play, because what we had, I think we talked about it. I don't think we talked about it, but I was going to talk about it on the Saturday show that we had during the week, where I think it was HR Horton and Pulte Homes have come out with their Q2. So last quarter's earnings, where they were down 25%. And Amy last show, who I've had on, was talking about people, at least where she lives, the new home builders were buying down people's interest to get them to buy,
right.
so you don't get the price discovery of the home price
Yeah.
going down. So the housing market right now is looking structurally shaky, and that's being nice.
No, and I'm in a position where I'm one of the people that's looking to buy a house and kind of got priced
Same.
out a little bit post COVID when rates went to zero, and there's a lot going on in my area out here, even though I'm, a couple 100 miles from the coast and in the middle of the state. It's still, the more and more people are working remote, and housing prices ran up like crazy here the last 5 years. Well, they're finally getting a little bit of a relaxation. So I'm hoping the next 6 months I'll be able to buy something at a reasonable level. And it doesn't have to drop a lot. It's not going to drop 50%, but I mean, that if I get it down 10 or 15%, it makes a big difference to me. Buy a something they want $500,000 for $450 is really all I'm looking for.
We're coming up on 2 hours, and my wife is going to be home from work shortly. The hospital closes at 10. So I wanted to give you guys in the audience, if you have any final questions that you want to toss out there on any ticker or any topic, now is your chance for Correct, Sparky, or myself. And while we're giving them a minute, Corrects, do you have any other funny retail stories from this week?
A bunch of companies that, like, if we're going to rapid fire out here, that got obliterated after their big run-ups. Open and Koss.
Okay.
Yikes.
Yeah. Those were some we were watching. There were some really interesting momentum trades this week. And I'm noticing, like, when I'm looking at news on GameStop, all of these tickers get thrown in there like, oh, the new meme play. Like, what is going on?
Well, Opendoor ran up, and then over 2 days, 50% down from the high. Like, just nasty rip
It's
back
still
down.
up pretty good. Still up.
Yeah.
Pretty good.
Yeah. From its bottom, it's still up good.
Tony asked me about that at some point when it first ran up, and
yeah,
the big problem is this company's never had a positive revenue quarter.
Well, what's interesting about it is they took a ticker of a real company from a couple years ago that just got acquired. So I mean, I think part of the confusion is people think they know what it is, and it's not. It's not the real estate.
And then
whatever the old or Open Table or something, whatever it was originally, is now part of something completely different.
I was confused because I used to trade Open Table back in the day when it was under.
That's what it was, right? Open Table, which is now part of.
And then
this is just part of. They got bought by.
Here's Kohl's. It had a similar massive spike from $9 to $21, and then retraced all the way back down to $12. It's still holding right there, but we know what's likely to happen next over the next few weeks.
Kohl's' big problem is it's having revenue compression because, like, most of these retail outlets, they're like, people don't go to them that much anymore. But there's a lot of bond traders in it because their real estate assets are actually worth more than the actual underlying company.
They do have a lot of standalone locations, different than somebody that's like mall centric where they're just doing leases. I think Kohl's either owns or at least has credit leases on a lot of property that's got some value to it.
And that's the play that a lot of them are making, is that, even if the company dies out and it ends up in, like, not saying that it is or is going to, but like, there's a lot of downside protection for bondholders because of the real estate assets.
We got Koss here. It ran up from $5 to $8.59, and then cratered.
That's another one that I've looked at that and I've never figured out what the magic is behind. that company people get so excited about.
I mean, they have good headphones.
No,
I
they're great.
understand.
They're amazing headphones.
But they have, I mean, they're not doing anything interesting with their revenue.
Well, that's what I'm saying. I think they're fairly level, aren't they? You can only sell so many $200 headphones.
I think the short interest has been building on it, if I recall correctly. I've had people asking me about Koss for a long time, saying it was going to squeeze. And I hope if you're watching today that your all of your options paid off this week. So there was a guy going heavy on Koss options that was talking to me in chat.
Speaking of Kohl's, there was I noticed at the same time had a sympathy rally was Kirklands, the company I used to be in, and got out with a measly profit. I'm glad I did because it just kept bleeding down. That's another almost like, I don't want to make it sound good, but almost like a GameStop story where they're trying to go digital. They're closing stores. They're having revenue compression, and it's just been painful. Like they're only profitable Q4. It's that same problem that GameStop's having where, except they're a home decor store where they're trying to do some sort of pivot, reduce down their footprint, get costs under control, go more digital. And it's just been not a great day for shareholders because it's just been rough.
What company was that?
Kirklands, K-I-R-K.
Are they the like big Costco supplier or something like that?
No, they're not
different.
related.
That
to
is
Costco.
a
different Kirklands.
Yeah, I don't know. That's what I'm saying. I don't know anything about it. That's why.
Yeah, so it had a sympathy rally around the same time that Kohl's
Yeah,
had
look at
its
that.
rally because they're
Look at that.
kind of sort of in that same demo, that middle-aged female demographic. It's a home decor store, like, you know.
Zachary, we'll get to your question, but I want to put up two other tickers on the screen just to compare that have been retail exciting plays this week in the last couple months, actually. Quantum, the Canadian biopharma company. This is a no revenue company, but it's a very tiny float, under 3 million shares. And I don't think there's a lot of shorts in this trade, even though they're selling it as a short squeeze play.
Yeah.
It does have a high cost to borrow, but it's because
there's just not that many shares available.
Yeah, there's not that many shares and nobody's loaning them out. So you get this FOMO run.
I've talked with people that tried to short it and they're like, we can't find shares to short it.
So I don't buy that it's a short squeeze play. I do believe the company needs to raise money. That's why they hire social media promoters. And he's done a fabulous job of promoting this stock. And there will be more cash raises coming out of Quantum. So trade it intelligently. It had a little dip here down to 15. Nice run back up to 25. Far better performance, far better recovery than I would have expected, but probably due to the low float. And I want to compare that to the other one, which is Genius Group.
It's melting down.
Which it ran up to $1.92, but it has not had that inflection
more
point.
Liquidity.
And mainly, I think because they have a higher share count, 87 million. They're about to get 50 more million shares added on July 30th when the ERL acquisition goes through. And then they have a shelf offering for 900 million more shares. So yeah, GNS is a tougher story. If I was forced at gunpoint to pick between these two, I'd be looking at Quantum, but you know what's going to happen, Corex? People are going to go in GNS because it's cheaper.
The problem I would warn about with Quantum is since it's illiquid, it cuts both ways. You might get in at a good price, but you may get out at a painful price because there's no one there to buy.
Yeah, I'm not promoting that you play either one. I'm saying if I was forced at gunpoint to choose between them, I
obviously have my opinions. I think they're both scammy shitcos, but again, if you can hold a gunpoint, I agree with Tony. And at the same time, because it's illiquid, you need to be careful about how you enter and exit because that lack of liquidity is going to cut both ways.
Zachary says, so there weren't shares to short because it's low float. It is low float and it's heavily controlled by insiders and retail who are not loaning out the shares. There's not that much institutional ownership. When you start getting institutions buying it and they lend out the shares, that's when you get the short. So because there's so few lendable shares, the cost to borrow on the shares that are available is through the roof, ridiculously high. And most shorts would just say, unless it really runs up super high, we're not interested. When it gets high enough, you will see them come in. And that's, I think, what happened here from 38 back down to 15.
Yeah.
The shorts got control. They came in. They got
You
control.
also had some dilution in there too.
Yeah.
And it's what you're saying. You get some waves of selling,
And then
it's
they
a low volume thing. It's going to go down.
What I thought was really interesting is when they made their announcement that they had taken a small position in GameStop in their own portfolio and it lost 10%. Like that was interesting. I thought that they could have had people that would come in, but apparently that didn't work out so hot for him. It was a turnoff.
I'll give Kevin a lot of credit. I mean, he's coming up with a playbook that is exceeding my expectations in imaginative things to attempt
be careful on some of those though.
To get retail excited. But the problem is, in my view, my opinion, this is not a short squeeze stock.
Yeah, it isn't. And on GNS, some of those creative things are something that investors should be careful of. He was talking about how, that companies have the ability to control the shares, and that's correct. But what he was talking about is, selling shares buying back shares at the bottom and selling them at the top. They're basically capping your ability up to the upside. Even if they're giving you a floor at the bottom, it's basically like running the wheel, except you're the person the wheel's being run on. It's like you got to be careful about some of this stuff that he's talking about and read between the lines, or you get gamed.
It goes back to what we started this live stream talking about. You must understand the company financials and their motivations.
Yeah.
These companies have negative revenue or no revenue, and they need to raise cash to survive, and they will use your pumps to announce or effect dilution. So just be aware of that. I'm not telling you not to trade them. Do whatever you want. Good luck. But understand what is coming. There's just going to be a day where you wake up that the share count increase. That will happen without a doubt. I can say that with certainty. Zero question in my mind. I can't tell you the exact timing, but it's coming. Zachary's question is, what percentage of yes voters do you think AMC needs for the December vote? We are unclear if they need. First of all, we don't know what they're going to ask for: more shares or a reverse split.
Yeah, and I'm pretty sure it's.
If it's,
I think I might have been wrong in my first analysis. I think that they may just need the majority of who decides to vote, not majority of all shareholders.
Yeah, we think it's going to be they need the majority of whoever shows up to vote. So 50% plus one, whoever votes that day.
And I think they'll get that easy. Like even during the one that was really controversial that ended up in a lawsuit, of the common class A shareholders, not the 8 voters, just talk about the common class A shareholders. It was 80% in favor. Like it sucks. Dilution sucks. Not bad news bears, but dilution or bankruptcy. Like the choice is obvious to even.
It's going to be a tougher battle on social media as we finish out this year. I think corrects, because there are going to be people, not me this time. There are going to be people saying if they don't get more shares, they face bankruptcy. I don't know that is the case, because we're expecting box office to be better, maybe cash flow positive next year, but they will be hamstrung. They'll be hamstrung on their ability to do anything.
Yeah.
Wouldn't you say, Sparky?
Yeah,
like if
you look at, if they can't unwind more of this debt stuff and get it exchanged, look at what the rates are going on there.
Yeah. If they have
rates
no
are going up on the debt they have, if they can't take it out, that's why they want to take it out.
If they have no shares, they are hamstrung in impacting the next batch of debt, which is due. What do we say, Sparky? 2027.
27's not a lot, but it's more the 29s that have the trigger for the higher.
No, but there's like another a huge amount of debt coming due.
Right. Well, it's the loan they put out when they extended like the original stuff in what 22 or something. It's not the bonds. I think.
Okay.
I will say with James there says he's watching VIX, and I just looked at VIX and at 1493. That is really low on the VIX. But what I've been paying a lot more attention to is DXY. I mean, at the beginning of the year, we're talking about DXY was up at what 107. It's 97 now. Are we getting a lower DXY? Is that because there's more liquidity coming into the market, or is it because the economy is retracting and there's liquidity being created because of the economy being crushed? That's my worry. Why is DXY coming back down? Is it coming down for good reasons, or is it coming back down for bad reasons?
2027. No, there's actually.
I thought it was 29. So that was the big monster year. And I know that's 3 years out, but in corporate finance, that's not that far out. You got to start dealing with it.
There's Odeon notes, 400 million, 2027.
Okay, that's a little different in the structure, though. That's higher up, isn't it? I don't think that has to worry about. It doesn't have the same trigger problems with coupons going up 2 or 3% or something like that because it's senior. I think
we got also down here 6 and a 8th senior subordinated notes, 125 million. Not a huge amount.
I will say to Brocate, like, I don't think a lower DXY is bad if it's for a right reason. Like, if it's because there's more liquidity coming into the market that banks are lending, there's more cash flows coming in, that's a good thing if DXY is coming down, and it's good for the global economy. But if it's coming down because people are bowing out, like there's more liquidity of US dollars for international trade because people are doing less trading, that's bad. And that's the thing is like DXY coming down was going to happen. The question is, why is it coming down? And then that answer to that, why is it coming down, is the answer to where, like, I know we're going hugely macro now, but like it's something to keep in mind when you're trading stocks, because if it's coming down because the economy is contracting, that's going to have ramifications on the stock market.
Zachary with another great point, and I don't know that I have a good answer for you, Zachary. He said someone was saying the amount of interest AMC would have to pay if a no vote happened. Remember, if shareholders vote against more shares in December, AMC pays some penalty, higher interest rates on their debt. He's saying that that would be less than how much shareholder value would be lost in a yes vote. We don't know how much shareholder value would be lost. It would be dependent on what future dilution happens. And right now, I can't really comment on it. I don't think anyone should comment on it till we see what is on the proxy in October. And then we can have all those debates and discussions. What do you think?
The only thing I would say to that's not related necessarily just the dollars and cents of debt payments is even if box office is better, but your credit and liquidity stance is worse, it makes it hard to do an IMAX deal. All right. I mean, it's just all these things they want to do that would be beneficial revenue wise. If you're in a more precarious situation liquidity wise, even if your revenue's better, on a no vote, some of that stuff either goes out the window or just becomes more expensive because it's a bigger risk for people to deal with.
Yeah, AMC would, in essence, they would be hamstrung to grow the company, limited by only whatever positive free cash flow they have.
Yeah, because I mean, it just comes down to something simple. If you want to refurbish 100 theaters and it's going to cost you $30 million, where the guy doing it, they say, okay, well, I want the money now, not paid over 6 or 8 months they're doing it if they're worried about getting paid, all that little stuff.
I think those will be interesting conversations for after October when
Well, that's,
when I
that's
can
exactly
see.
what you're saying. You don't know what the impact will be until it happens. But
Yeah.
it's
Until
not
we got to
just
see what
the
we're voting
interest
on.
the debt.
There's no point in arguing about it. I mean, it's bad enough to know it's coming, but we'll have plenty of time to argue and discuss between October and December once we know exactly what we're talking about. Like, what are the specifics?
Hey, Tony, I have a curious question. I know you follow a lot more looser tickers than I do, and I saw this because I kind of lurk because I've been following the Wolfspeed bankruptcy and their Discord.
Yeah.
They were promoting the stock LXRX. Have you heard anything about that?
I have not.
It's a pharmaceutical company. And then they created a whole Discord room about it. So I was just sitting there like, what in the flippity flip is this?
It's gone from 28 cents to $1.10 LXRX.
Because that was one of the things I wanted to ask you about, because sometimes you have the nose on things that are completely outside of my.
Well, I follow a lot of the stock promoters, not because because look, they can make movement on stocks, and that's how you can. You just got to not listen to them about price targets, but if you can catch the trade early, you can get a quick momentum in and out.
Well, actually, I think you and I need to start a pharmaceutical SPAC.
I mean, like, look, these companies are, if you want to run a promotion scheme.
YouTubers other than Tony, because he'd never do it, to pump it up for us.
Good Lord, this company looks horrible.
I know, right?
Look at the profit margins, negative 568%.
Yikes.
Cash, 62 million. Shareholder equity is.
This is all what I expected. I just was wondering if you had an ear to the ground of hearing anyone else.
They have positive shareholder equity and positive working capital at the moment, but
when you're bleeding cash like that at the moment is key.
Right. That's why I added that. Operating cash flow negative 167 trailing 12 months. What is it quarterly? Negative 43. They have 62 million in cash. All right. So I would say, they got 3 or 4 months of cash left. Let's see what dilution tracker says. LXRX. Yeah. Dilution tracker is saying they have 9 months of cash left. And it looks like they have no open shelf offerings. So
really? Wow.
That'd be something I'd look into. Why not? Why not? Aren't they trying to raise money?
Right. Especially given the rest of the situation.
Yep. All right, guys. The wife is home.
Good.
Thank you for your time, Sparky. Thank you for your time, Corex. Ladies and gentlemen in the audience, thank you. Hopefully you guys enjoyed some of the discussion. Maybe you learned something. Maybe you learned I'm long on Railtown, not short. Maybe you learned I did not compare it to Nixie. Anyways, we love you all. And I will be around later this weekend. We'll have some more chats. Thank you.
Up and to the right. Up and to the right. Up and to the right.
Hello, millionaires. Short squeeze plays where fortune flip. GameStop's journey, an epic trip. From humble roofs to the moon we fly. A company's dream will amplify. Reddit warriors, keyboards in hand. With their eyes on the prize, they took a stand. No one's selling, we're here to fight. How does it go? Up and to the right. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar, no asses in sight. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar, more asses in sight. Hedge funds trembling, Kenny's in shock. GameStop stock, you'll never stop. From diamond hands to rocket ships, we're not selling, be one. With every share we'll never stop. Investors say we love the stock. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar. Up and to the right. Up and to the right. We're in for the ride. Together we'll soar. Up and to the right.
Surprise!
We're gonna win.